Good evening to all of you, and this is Ranjan from smartfinancing.com. So this is our website, smartfinancing.com, and we are having a lot of products on your education as well as software products. So here, this particular video, I am just going to describe in on screen how to form a delta neutral strategy and what is the meaning of a delta neutral strategy, meaning risk in the delta neutral strategy and how delta can be understood in a better way and simple way. And this you can use in any instrument which is having options. So first we have to understand the delta. So here I am using the Bitcoin's options and it is delta exchange platform. So if you are interested to open delta exchange account, then you can refer the description. I have given our referral link. You can utilize it. You will get lot of benefit and supports from us. So fine. So I'm just going to, because these options are trading in different expiry: 5th May, 6th May, 7th May. These are the daily expiry, then weekly of expiry, then it comes to monthly expiry. So we have 30th May, 27th June. These are the monthly expiry. So I'm going to the 30th May expiry, and here I am demonstrating you. Say I am going for a strike of 95,000 put. Right side is put and left side is call. So this is saying that 95,000 put is having a delta of minus 0.50. So how you should read it and what is the meaning of this 0.50? So if I just go to this, you can say 95,000 put having a delta 95,000 95k put is having a delta, and this is put option having a delta of minus 0.5. What does it means? And the future of the Bitcoin is trading at 94.5k. 94,500 and odd, the Bitcoin future is trading. Suppose if you are buying this future, if you buy this future, along with that, if you are buying the 95,000 put option, say you bought the future at 94,500, you bought 95,000 put option also. So whatever the premium it is quoting, say it is quoting at 4264, you have bought it at 4264. What it says, if the Bitcoin fall by $1,000, Bitcoin is now at 94,500. If it fall by $1,000, so your delta is 0.5. So approximately, not exactly, approximately only $500 you can recover, because it has a delta of 0.5. Why not $1,000? The remaining values will go in the theta decay or something. Approximately 0.5 delta means you can recover only $500. Similarly, if anything is any put is having 0.3 delta, so you will recover only 30%. Means out of $1,000 fall, you can recover approximately close to $300. Some having delta of 0.7 minus. If you have bought the future, if price falls, then out of 1,000 you can recover 700 USD. So this is how approximate value. It is not the exact value. Exact value will be derived factoring the theta and other things, but for your understanding, this is what you can do. Then what is the process of forming this delta neutral strategy and how it works? Say all futures are having delta of 1. So all futures, whatever the futures, buying of a future of Bitcoin or Ethereum or any future, it has a delta of 1. Delta of the futures are 1. If you are buying +1, if you are selling, it is -1. So it is, and put option delta are negative, call option deltas are positive. If you sell a put option, then its delta will be positive. If you sell a call option, its delta will be negative. So these are the general conventions of the delta. Suppose now I am going to form a delta neutral strategy. So I am hunting for, because future is having the delta of 1. So suppose if I am buying the future, then I have the delta of 1. So I am going for 1 lakh strike put option, which is having a delta of 0.69. So this I am going to buy. So I am going to buy the 1 lakh strike put option, so of 30th May expiry, and I am also buying a 90,000 put option of 30th May expiry. So by this process, what is happening? So once I buy this, what is happening to my Greeks? So as you have seen there, so here my delta of this one is 0.69 and delta of this one is 0.3 negative. So it is 0.98. So I'm just near 0 because I cannot make it exact 0. So slight deviation, but it can be considered as 0. So you can think that if there is a 1,000-point fall happens, if there is a 1,000-point fall happens, then these two put options can recover 1,000 rupees, but it won't happen. Why it will not happen? Because these two put options are having a theta or time value component of $144. So what will happen here? If the price of Bitcoin fall by $1,000, so here I will be getting 1,000 minus 141. So 141. So theta I have to reduce. So 9, 9 for us 5, and 9 1 as 8. $859 I can recover. This $141 will be a loss for me at any cost, because this is the amount of theta I have. This is the amount of theta I have. So which will be at any cost will be get as a loss. However, we cannot make this 140 if we are just going to recover this 141 USD theta. Then we have to sell some options, preferably call options, to reduce it. But in that case, what will happen? Delta 0, theta also 0, profit also will be 0. So if we wish to reduce that 141 theta to 0, then our profit also will be almost reduced to 0. We'll be initiating the position, but will not get any profit out of that. So here, if I just go to the profit and loss table, so here you can say that we can have, see, total, this is the maximum risk it has, 25 days. So this is the profit and loss. It is telling that this is theoretical. This profit and loss may not come as it is showing here, because it is telling a endpoint logic. On the day of expiry, if this happens, then what will be the profit and loss? But this is a variable thing. So here you can see here our main purpose of the Greek understanding. This is 0 and almost 0, and we have entered the trade. But what will happen if the price does not go above 1 lakh, or if the price does not fall below 90k, which is currently at 94.5. If from here price doesn't move, then every single day our $141 of theta decay will result the theta losses, which is for one lot it is coming to 3.9 USD, and for 1000 lots you can say that it will be having $3,970 as a loss. So for this we have entered at a delta 0. So how we can adjust this strategy? So do not get frightened by this theta. because the art of trading is that trade should happen. It is not the art of investing. You are entering art of trading. So whenever you form a delta neutral, theta neutral, vega neutral strategy, your attribute is you are a trader, you are not an investor. Investors and trader, what is the basic difference? Investor invests and forgets. Trader has to engage himself in the activity every day. So what will happen in this case? Say Bitcoin has gone $1,000 plus. Imagine we have bought this Bitcoin, it has gone $1,000 plus. What will happen here? This 0.3 delta also will change. It may go to the 0.25 or 0.20. This 0.68 delta also can change. It can go to 0.58 or 0.59. This can happen. If this happens, there will be we have entered at 0. Now it is 0.78. So each time, so we have entered at 0 and this is going to 0.25 positive or 0.25 negative. Suppose it gone to $1,000 up move, it has gone to 0.25. So what we have to do? Adjustment of delta neutral says close these two legs and immediately choose the different strike options and bring it to 0. Bring it to 0. So these put options of 90k and 1 lakh will be changed. This may be 1 lakh 2000, this may be 92k, but you have to bring it to 0 again. Similar way, if it fall back and it is 0.0, 0.02 and if it is going to 0.25 negative, say Bitcoin has fallen by $1,000 and your net delta at any moment of time coming to 0.25 negative. That time also you have to book the profits in these two options and choose the options which will again make it 0. So this is the process of getting engaged in that strategy and making the strategy always delta 0. Suppose if you want to earn money from the delta 0 formations, this is the process. Initially your strategy will be at delta 0. Once the delta goes by 0.25 positive or 0.25 negative, that time you have to adjust the strategy and again make it 0. So this process may take $1,000 move can make it, $500 move can make it, or more than $2,000 move can make it. But this is the process to earn money from the delta 0 formation strategies. Suppose if you wish to learn more about the option strategies, whether it is for Bitcoin or for any other instruments, I have a very good course on the futures and options. So here we have explained various option strategies in very simplified ways where you can able to master these techniques and apply in your trade. So here practically to work on this strategy, you require some hand holding from some experts. So currently we have our webinar program on. So this is 1 year's guided crypto Lakpati program and many people have enrolled it and we have already started the batch on 1st May and it is an ongoing batch. So in future, if the enrollment again reopens, you can feel free to join that. However, how to earn the money from the delta 0 formations? So that is in this way. While forming the delta, net delta should be 0. And ignore the theta. So the moment the price corrects and it goes to negative 0.25, how it will go to the negative 0.25? If this is going to 0.68, it is going to 0.99. And this 90k, 0.3, it goes to 0.5 negative. So what happens? It will automatically goes to 0.5 negative. So I am talking about 0.25 negative. So every time it goes to 0.25 negative, book the profit in the put options. Choose the new strike options, preferably in the same 30th May or 27th June, and make it zero. If it goes up, future will be adding on the profit. However, this particular options will be losing its theta as well as its delta value or intrinsic value. But if it is going to a positive 0.25, that time also close this particular put options or book loss in these options and choose a new strike of options to make this delta zero. Here one contest will come or one doubt will come. Why I have chosen two strikes? What will happen if I take 0.5 delta two lots? Two lots. So you can say that zero point 0.5 instead of taking a 0.7 and 0.3, why not I should take 0.5 two lots? That is one of the assignment. That is only for the mature traders. Give your comments in the video if you understand. Why there is no two lots of 0.5 and why one is 0.7, one is 0.3. What is the logic of choosing this combination? Why I have not chosen this combination? This could have been easy. I could have shown that it is 0.25 and nullify it to 0. But I have not chosen these options. I have chosen this particular two different strikes, making it slightly complex, but making it to delta 0. So this is also another alternative. Why I have not chosen this alternative of choosing a single strike having two lots. That is one assignment that only if you think on this subject, you will find the solution. Thank you very much. Thank you for your time.